We spent all this time learning how to work for money, but never how to have money work for us. And that's where I want to shed some truth today, and that's what we're going to talk about. Hey guys, Justin Badgema, founder and president of Access Property Management Group. Today is March 31st, 2020. I wanted to reach out to you today and talk about truth and lies. You see, the lies started in school. None of us were taught about money, or truly taught about money and finance in school. Maybe we took some classes in college and we were taught about the finance system in place, but we were never truly taught about money. And because we were never taught about money, we just take the mainstream advice that's dished out there, that's pumped out there through media, through advertising, you name it, all kinds of stuff, right? Edward Jones and the retirement accounts and da-da-da-da-da-da. Here's what I believe to be true, is that when you follow that advice, you get screwed. You get screwed. And here's how you get screwed. Just like 2008, where I watched my parents lose, half of their money in the stock market, gone. They weren't the only ones. When things like this happen, when the markets tank, very quickly you can lose a third, a half, a ton of freaking money, right? And it's scary as all can be. Think about the stress. Think about those people who were nearing retirement who thought that they're going to be living the next 5 to 10 years, the golden life, enjoying the water, enjoying the boat, time with their kids and their grandkids, and living the life after busting their ass for 40, 50 years in the workforce. The truth is today, they plan on us. When I say they, I mean the government, truthfully. They plan on us working until the day that we die. And that's the reality for most people, because we've been lied to. Lied to by the powers that be, lied to by the institutions, lied to by Wall Street, to believe that retirement 401ks, RAs are the financial vehicle to a prosperous golden years of retirement. It's a lie. It's a lie. It's 2020. Same thing's happened as what's happened in 2008. The financial markets have crashed. Same thing that happened in the dot-com bubble. This happens over and over. It seems like it happens about every 10 to 12 years or so. 8, 9, 10, 11, 12 years. It happens. And so the very fact that people are surprised that the stock market went down, it's like, seriously, you're surprised? Like, yeah, it's horrible for people, but that is the reason not to put all of your eggs in one basket. If you're banking on a retirement system, the stock market, the New York Stock Exchange, with the Dow and the S&P, if that's your thing, I want to encourage you to at least dip your toes and to look at other unconventional, contrarian assets that actually do weather the test of time and the financial manipulation that's going on right now in the markets, because there is a bunch. Here's one of the things that we get really confused about as, just in society, that we don't understand, that we can't comprehend about the money. Again, I think it's by design, because we were never taught about money. We were never really made aware of how it functions, how it operates, and the necessity in our daily lives. It's interesting to me, I'm going to go on a little tangent here, that we spend all this time educating people how to be great employees, how to be a professional at something, whether you're a CPA or a lawyer, a doctor. Those things are all incredibly needed, don't get me wrong. We spent all this time learning how to work for money, but never how to have money work for us. And that's where I want to shed some truth today, and that's what we're going to talk about. Back in 1971, Richard Nixon took the United States off the gold standard. Now you have to remember something. When this happened, this was a temporary measure. Nixon did this in the utmost, the markets were in upheaval, and they blamed hoarders for hoarding this gold, and that's why the markets weren't functioning correctly and properly. The truth is that France called the United States on its bluff. We've been spending more money than what we had, and we were manipulating the rest of the world, and they caught on, and they called it, and that's exactly why the United States had to go off the gold standard in 1971. When Richard Nixon took us off the gold standard in 1971, it was a temporary measure. It was a temporary measure in urgent times of crisis. Well, 1971, that's about 50 years ago. I'd say a little bit more than temporary, wasn't it? The truth is that the United States is the largest debtor nation probably ever, that's just creating so much currency, so much fiat paper. Here's one of the things that a lot of people don't understand about the United States banking system. It is a fractional reserve banking system. That means for every $1 that's created, albeit by me putting $1 in the bank, you putting $1 in savings, or the Federal Reserve, which again is not federal, but when the Reserve prints money, what's happening is that $1 is lend it out 9 more times. That $1 becomes 10. That's the way our financial system works. So, we're printing $5 trillion right now. This is stimulus 1, 2, and 3, or whatever it's been called anymore. I don't even know. It's almost impossible to keep up with as much stuff that's coming out from Congress and the Hill right now. But know this, they're going to print money into oblivion. I was just looking at U.S. debt from 20 years ago. Is at $5 trillion. Today we're north of 22 trillion. That doesn't even take into account everything that's going on in the stimulus. Our U.S. debt is skyrocketing. It is unsustainable. I'm not here to preach a message that you've probably heard over and over again, but I do want to talk about how you can prepare yourself to take, maybe not take advantage, but at least to not get brutally hammered in this correction, this crisis. So here's one of the things that's happening that's screwing majority of people. We have ultra low interest rates, which can be a boon for real estate investors. Locking up long-term debt at a great rate. Makes perfect sense. I highly recommend it. It's a great strategy to do. The problem, a lot of retirees have fixed assets, have fixed incomes. What is that fixed income at? 1%, 2%, maybe 2%, maybe. They used to be getting 8, 9%. That made sense back then, but today there is no return. The problem is we are flooded. We are swimming in a sea of liquidity. There is so much currency, fiat currency in the system. Personally, I don't think this thing can end very well. So, here's one more thing to me that makes me really question how long this whole game can go on. That's unfunded liabilities. When we start talking about pensions for police, firemen, school teachers, we start talking about Social Security, Medicaid, Medicare, you're talking upwards of $200 trillion in unfunded liabilities. $200 trillion. These numbers don't make sense. They never have and they never will. What's going to continue to happen is that there's a transfer of wealth. You see, when these stock markets fall by a third, the money doesn't evaporate. It's going somewhere. It's a transfer of wealth. And if you think that you can compete against high-frequency traders, the smartest people in the world have gone to the most elite, prestigious schools in the world, I can't. I'm not that sophisticated of a guy. I understand slow things such as real estate and a business where I can add value and impact people's lives and help them and then be rewarded for that. That makes sense to me. Adding value, leading with value. What they're doing doesn't make sense. So the whole stock market, the whole reason that you hear so much on TV about, this mutual fund or this index or that, the name of the game in Wall Street is assets under management. There's a whole lot of money being made in Wall Street. It's just not you or I. It's the fund managers. You have to know how the game is structured. And it's not structured for you or for I's advantage. We are nobodies in the game of Wall Street. Now, I'm not telling you to sell everything that you have in the stock market. I'm not giving you that kind of advice. That's not my position to say that. What I am saying, or what I am asking is just objectively question, man, it's kind of ironic that every 10 years, there's a huge crash. Oh, but they want you to hold the long term, buy and hold long term. Well, what happens when you retire and the market's in the crapper? What do? Especially when you have 100% of your life savings, your retirement funds in the stock market, right? We can start to see the fragility of that plan. It doesn't bode well. It doesn't work well. I have never seen people get rich by saving money in the stock market. I've never seen that. I'm sure it's maybe happened. I guess it depends on what your definition of rich is. But my definition of wealth is the ability to keep living. How many days can you keep living without more money coming in? And to me, that's the definition of wealth. And I think that makes a whole hell of a lot of sense today in the times that we're in. Those stocks aren't spitting off cash flow. And if they were spitting off dividends, they're probably going to be cutting those. It's just crazy. So I want to talk about a couple truths. The truth of the matter is once you can see that maybe there's more to this than what meets the eye, it starts the love of learning. It starts finding truth. There's so much smoke and mirrors and fog and misinformation and what is true, what's not true. It's really hard to figure out today, isn't it? And that's why the best investment you can do is up here. If you can't do anything right now, you can't make moves, you're not in a position to deploy capital or to buy things, and maybe right now it's not the right time anyway. what you should be doing, what we should all be doing, is learning and educating ourselves to take advantage, or at least to be prepared to act when the time is right, so we don't get financially murdered. Because that's what's going to happen. People are going to be ruined. People will be ruined and never recover from this. And that's not right. That's not right. But I don't believe that giving everybody handouts is the right thing either. And so it's all of our responsibilities to take personal responsibility. It's time for personal responsibility. Stop following all these leaders, all these politicians. They're all liars, left and right. They're both sides are liars. I don't trust any of them. I don't. I'm sure there's a couple good ones, but they don't last very long in that crooked place, do they? So I don't choose to play that game. I play a different game. I play a game of real estate, business, and real assets. Real, tangible assets. See, with all this money printing, what happens? What happens when you add more and more and more helium into a balloon? It gets bigger. It gets bigger. It's exactly what happened since 2008. They pumped about $1 trillion, actually more than that, but about $1 trillion in stimulus in 2008. And look at what happened to that bubble. We went from a Dow Jones of 15 to 18,000 up to 29, almost 30,000 points. We basically doubled the problem. We didn't resolve anything. We doubled the size of our problem, if not exponentially increased the size of our problem. Now we're at a point of systemic risk. People think this is all about the COVID-19. That was just the needle. This system was waiting for something to happen. So my last thing here is don't panic. This isn't a reason to panic. It's actually a reason to get excited. Once you find truth, once you find knowledge and you learn it, you can take control of your financial future, and you can. I'm living proof of that. You can. Once you do that, you seek truth. You look for information that makes sense, tangible things that you can do. Don't follow everybody else's advice. Why would you? Why would you do the same thing that everybody else is doing when most of them don't have a clue what they're doing? They're doing what their advisor told them. These financial advisors, they can have just a couple weeks of school. So I think we have to be very careful. Let me throw this out there. One thing that's important to understand about the world of investing. There is such a thing as suitability and fiduciary responsibility. Now, as a property manager, when we manage clients' properties, we have a fiduciary responsibility to act in the best financial interests of our clients. When you buy mutual funds, when you buy stocks, that person, that broker, that dealer, that financial advisor does not have your fiduciary responsibility. They have a suitability standard, much different. And that's the information, that's the truth you start to find when you explore your own financial intelligence, start learning and growing. I gotta tell you what, you do that today, it's gonna be a really exciting next decade for you. Because there's gonna be a lot of opportunity on the back end of this to clean up this mess. And we are going to need, as a society, as a country, as a world, we are gonna need people who are entrepreneurial, who are investors, who can go out there and put investment capital back into the markets to provide housing, provide jobs, and our way of life. So this isn't doom and gloom, this is hope, this is optimism, but this is the time to get prepared and do the homework. Justin Badger with Access Property Management Group, signing off.